Hello, hi. Yeah, today I just wanted to share with you as to why I'm bullish on the market right now. Even though Nasdaq is around 14,000 plus. First is if you look at the March jobs report that just came out last Friday, the growth in the wages has actually only increased by 0.1%. And as you can see here, and then for the February one, it was actually increased by 0.2. If you look at the normalized wage increase per annum is around 2%. But of course, in 2021, there was a wage spiral that went up to about 5% over. So if you look at the current February and March one, the trend is actually looking very good. It's average of 0.1, 0.2, and then if you multiply by 12 months, you're getting around like 1.2 to 1.5 ish. So which is within the very comfortable wage increase that's in tandem with the Fed expectation on the inflation, a good inflation, which is at 2% or below. So why I say that wage spiraling charts are flattening helps the market because um, usually in a strong employment situation, as you can see, the March payroll, I mean jobs data also show that employment very strong, which is of course good for economy. But if it's a strong job economy with a flat wage spiral, it actually it's a very very good thing. If it's a high job employment with a high spiral of wages, then it shows that employers are having difficulty. They have to up their prices, their salaries to actually pinch good talents into their companies. So these are some things that wanted to share. And the next thing is let's analyze about the meaning of recession. The recession actually means that there will be two consecutive quarters of negative growth, which of course is should be affected by um, either market do its own thing, like for example, market help itself by because of the war, the consumer there's a fear out there, consumer actually reduces in their spending. That will also reduces the revenue of the respective company. For example, let's say consumer stocks, or it could be driven by Fed, meaning that Fed were to increase the interest rates. As they said, they wanted to do it 7 times over the next 7 meetings, which should be around another within the next 1 to 2 years. Because usually they have about 2 to 3 months. Every once a while, they every 2 to 3 months they have a meeting. So, and then the fourth one is about the yield inversion, where this is more like a technical data on the 2 years and the 10-year yield, whereby it's kind of weird right now. Is usually when you invest in a 10-year bond, you tend to get higher interest rates. Whereas now, because there are more risk in holding to treasury money for 10 years, but if you hold for 2 years, the interest rates that you're supposed to get is lower. But in this kind of cases where it is called the inversion yield kind of cross, whereby short term or treasury yield is actually higher than the longer term ones. I'll do a separate video on that because it's very hard to sum up all this in 5 minutes. And then the fifth one is inflation actually is very good for companies with pricing powers. What I'm trying to say is that company may end up selling less things but at higher prices. So at the end of the day, their revenue per quarter will still maintain compared to the previous ones, which has happened to some companies already, like Home Depot and all that. During the timber rise in those commodity prices, Home Depot actually sold less things in that particular quarter, but they achieved the same revenue. So inflation, I mean recession may not happen. The 7 is actually the change in consumer behaviors, which is, as you know, during the COVID, everybody was actually focusing on purchasing durable and non-durable goods. And as you now know that now it's back to reopenings, kind of back to the new norm, or the old norm, whatever it is, people are actually allocating a portion of their money to services like hotels, holidays and travels, or engage in personal trainers and all that, right? So let's say you got $100 discretionary income, you may start to apportion them, and that will actually help reduce in purchasing all those durable and non-durable goods. Will help to reduce supply chain crisis. Will help to dampen down the cost of raw materials, and also help to dampen down the cost of like freight and all that. Because less people are using it, just because of consumer behavior. And then the eighth one is um, because of the war that happened between Ukraine and Russia, and there are so many sanctions that's going on with Russia right now, right? Who are the net? One person's loss is another person's gain. Then who will be the person that's going to be the seller for the European countries, like energies, wheat, with fertilizer and all that? That they always get it from, or palladium, platinum from Russia. It will be Canada and US. So I see that there's actually a good potential for US companies to have better growth in this respect as well. And then point number 8, right, is about inflation. The commodity costs rise in inflation allows US companies to restart their mining business, their manufacturing plants and all that, because um, especially if inflation are being sustained high but not at unreasonably high level. And US and Canada are very, very rich in resources. The reason they have closed their factories down or mining operations down was because they just couldn't compete in terms of price, um, in terms of like the cost and the selling price. But now the selling price you can achieve much higher, so it makes sense to actually restart all those resource rich kind of business or oil production and all that as well. So that also benefit US companies. So, and the other one I'd like to say is um what was I going to say is so wages doesn't really outpace inflation at the moment. And then the other thing I like to say is yeah, so that's about it. Yeah, so if anything I will probably put down in my YouTube descriptions. So and yeah, that would be something that I would like to say right now. And I think overall I'm pretty bullish about the market, and there's still room for growth. So thank you very much.